Welcome to this special episode of Crypto Capsule Commentary, where today I'm going to focus on the recent development that apparently we have identified the individual behind the 2016 hack of the DAO, a hack that is worth over $11 billion today. I'm going to cover over the next couple of minutes the what, the why, and the how, and most importantly, what are the three elements that I'm watching over the next couple of weeks that I believe will have an impact not only on this hack, but also on the broader ecosystem. Hope you're ready. Here we go. This episode is brought to you by Crypto.com, where you can buy Bitcoin and over 150 other cryptocurrencies with over 20 different fiat currencies. Get up to 8% cash back instantly using the Crypto.com Visa card, plus 100% rebates for your Netflix, Spotify, and Amazon Prime subscriptions. Check out the link in the description to download the Crypto.com app and stake CRO to get $25 with the code Henri2022. So first, let me give a bit of background for those who may not be familiar. But basically, the hack of the DAO is actually a big event in the history of crypto ecosystem. Really, what happened is 2016, there was this DAO that was built, and literally the goal was actually kind of making a venture capital fund where individuals can contribute at, but also have a say in voting of how that VC fund, if you want, the DAO, was going to act and interact. What happened then at a time, obviously the DAO was very successful, but up to 1/3 of the Ethereum in that DAO was hacked. At a time, to put things in perspective, this represented about 5% of the Ethereum in circulation. So it's a big deal and a big amount. It was about 3.6 million Ethereum, and at a time was worth around $140 million. It's around $11 billion in today's values. So obviously this was a big event. It was really a big existential crisis. Not only for Ethereum, but for the broader crypto ecosystem as well. It led to a hard fork, which basically the old chain got renamed as Ethereum Classic, and obviously there was a hard fork to what we call now the Ethereum blockchain. The other thing that happened as well is that with the report that just came out this week, for the first time, journalist Laura Shin, whom I actually had on my podcast earlier this month, followed the trail of what happened. For example, what we know that after the hack happened, the hacker moved the Ethereum Classic that he had to Bitcoin using Shapeshift, which is a decentralized exchange. And at the time, around 282 Bitcoin was taken out from Ethereum Classic. Then what happened is, well, about 50 Bitcoin were sent to a privacy wallet called Wasabi. Wasabi is one of these mixers or privacy tumblers. Where basically it's very difficult to trace when you send in crypto to be able to trace where it's coming from. And this obviously poses a big problem for a lot of these traceability firms when they're trying to follow the chain. What turns out in this case is that obviously the hacker sent the money to a Wasabi wallet. From there, it went to 4 different centralized exchanges and to convert basically the Bitcoin to a privacy coin called Grin. And from there, the user withdraw the privacy codes. So this is obviously a big deal. For the first time, we're able to follow the trail of how those transactions took place. There's a couple of developments that are important here to understand. And when I talk about the impact that it has on the broader crypto ecosystem. First is, for the first time, it is publicly known now that traceability firms like Chainalysis and others are able to kind of demix transactions that were sent in privacy wallets like Wasabi. And this is a big deal because obviously not all people use it because they want obviously more privacy, but also a lot of individuals who are laundering funds or bad guys, if you want, are also using wallets like Wasabi to hide their traces. Now, if we are able to actually trace transactions that went to Wasabi and other privacy wallets, this is a big development, and we should expect to see more law enforcement activity and more traceability activity of individuals who try to launder funds or hide their traces using such platforms. So that's a big development, and this is one thing I'll be following very closely over the next couple of weeks and months. A second thing in relation to this case is to see how is law enforcement going to react. Of course, while in the past we didn't know who the identity of the hacker was, in this case, the evidence that is presented, again, at least at face value, is pretty compelling. not only there's a trail from the Wasabi wallet to the centralized exchanges, whereas from a lot of these centralized exchanges, there is KYC done, there's identifiable information, and these exchanges can be easily subpoenaed, where the exchange has to divulge the identity of the person that was using it. But also in this case, the hacker used platforms like AWS in Singapore. There's IP addresses, and there's many other identifiable elements that were noted in the report, in the article. And these are, at least at first glance, pretty convincing. So it'll be very interesting to see if law enforcement takes more interest in this case now that this information is out. And third, probably the main thing that I'm taking out of this is that this really happens the same month that we also identified a couple of weeks earlier, the couple that was laundering literally billions of dollars from the proceeds of another hack, the Bitfinex hack that happened actually not shortly before this, the DAO hack. And really what shows you is that not only law enforcement, but also a lot of traceability firms today have the capabilities now to follow the trail, follow the money, even in cases like these where Wasabi and other privacy wallets were identified. This really shows that the competency level is way higher than many people expected it. So if you've been a bad guy or you've been trying to hide your traces with crypto, this is something that should keep you probably up at night from that perspective. Also, I'm hoping this is going to kind of put to rest a lot of the misconception that people have that crypto is not traceable, that it's used by criminals, because this really shows us once again that despite a lot of the efforts that people can take to try to hide their traces, all you need is one mistake to be able to be traced back by some of these tools from that perspective. So I hope this is interesting. I think for anybody interested, I recommend you go and you read the full report of how they were able to identify the identity of the hacker. But I think what some of the big takeaways that I just mentioned are, I think, quite important and something to watch the impact they may have over the next couple of months. Hope this was interesting, and see you all soon for another episode of Crypto Capsule Commentary. See you guys.